Hello, my name is Joel, and I'll be doing my project on Northern Trust Bank. And here we have our group members, of course, and they all contributed their part to this group project. So first we're going to start off with our business strategy, and first we're going to start with our two principal client types, which is institutional and personal. And then we're going to divide into our three business segments, which is asset servicing, asset management, and wealth management. And then after this slide, we'll be going over our non-interest income, core deposits, and our loan to assets. So here you can see our non-interest income as a percentage of operating income. Here we compared it to the industry. So on top you'll see our non-interest income, and bottom you'll see the industries. Of course, ours is higher than the industries, and the trends seem to be in the same correlation, just a little bit dip after 2015 for the industry. In regards to Northern Trust, you can see a little slight decline as of 2017. And then we have our loans to assets ratio also compared to the industry. Industry is also on top, ours is at the bottom. Same strong correlation compared to the industry. Same decrease once it hits 2017, of course, but as of recently, just a plateau. And here we have our loans to core deposits ratio. Industry again, above ours, and not much trending except for the slight decrease as of 2017. And yeah. So next I'll be going over our SWOT analysis, strengths, weakness, opportunities, and threats. First we'll start off with the strengths of our Northern Trust Bank. First being that it has developed a strong reputation and has a strong client base, being that it is the oldest bank of Chicago, therefore we gain a lot of reputation and loyal customers within our branch. Third being our conservative portfolio of assets, which reduces percentage of our risky assets. Strong leadership of our team, which attracts new talent as well as our clientele, and transforming existing leaders into new roles, which is always great to hire within as opposed to external. And then also we have 13,000 employees over 17 countries. So we have very few weaknesses. I try to point out the main ones. Of course, our lack of client diversity, as it caters mainly to the needs of wealthy individuals and corporations. Of course, that's something that our bank can always work on. Participation in TARP exposes the firm to scrutiny from the government and as well as the public. Also, we're involved in lawsuits regarding our securities lending programs. And then we move on to the opportunities, of course, there is a scope for expansion as it is not present in all domestic markets. Also, there's a retirement of baby boomer population will require more investment services. So as the baby boomers do get older and do reach retirement, they will need more of our services, as opposed to the younger generation. And of course, third, small financial institutions can be acquired to gain access to untapped markets, which is always great. Then we'll move on to our threats. Of course, the potential default of any troubled European country may cause tremendous losses for all the banks present worldwide. Again, our banks expand to at least 17 countries, Europe being one that our bank is within. So, the fall in their economy could strongly affect our bank. Second, more losses can be incurred if the U.S. real estate prices fall, which is always a possibility within the near future. And of course, the increased regulation after the 2008 crisis can lead to less returns, as banks are not allowed to involve in higher risk portfolios. But of course, that goes for all banks, not just ours. And then we have our major events from 2000-2008, sets of a steep downward slide in stock prices. Posted strong organic trust fee growth year over year. It's always a great thing. Added to our geographic footprint and growth prospects, acquiring UBS Asset Management Fund Administration, which is a very big acquisition on our end. And then of course we reached record levels of assets under custody and administration, increased equity capital, and continued our focus on growing our presence in select mega markets, which is always a great thing. So from 2009 to 2014, our bank created the Corporate Social Responsibility, CSR for short, structure in 2009. We have 85 offices in 18 states and 20 countries, of course, and which include our Beijing office, which is expanding massively, being that China's economy is growing as well. And we've launched Global Family and Private Investment Office, and we have debuted Flex Shares, which is a family of exchange-traded funds, ETFs actively traded as opposed to mutual funds, and our strong capital and equity markets. And of course, here we're seeing a comparison of our cost efficiency ratio over our profit margin in comparison with major regional market banks within our industry. The blue is of course Northern Trust, red being the industry, strong correlation. Of course, this is only 2016. You can see a lot of fluctuation, but of course towards the end of 2016 you'll see a quick jump. And then here we have our net interest margin and asset utilization. Here we have our profit margins and our net margins. Of course, you see a slight decrease in 2014, but of course an increase going forward. And here, of course, we have our cost efficiency ratio, everything compared to the industry, our net interest margin, our profit margin, and our asset utilization. A lot of strong correlation with the industry as opposed to our net interest margin, in which you see in the industry there's a steep decline in 2015, but of course goes back and fluctuates into a plateau. Profit margin also very volatile, but of course at the end it deeply correlates with the industry. And then again, our profit margins, our ROA, return on assets, which is a big part of our bank, and our asset utilization, all strongly correlated with the industry to a point where it only seems like there's one line, but of course there's two being compared. It's just a very strong correlation in comparison. Yeah, so you see a lot of steep declines after 2018, of course, the financial crisis, which we're all aware of, and then of course we're still recovering from those events. And then again, return on assets, which I've stated before, return on equity, and our equity multiplier in comparison to the industry. So future expectations, of course, our bank is constantly expanding throughout other countries, which is always a great thing, you know, in the sense that it provides diversification. But of course, if any other country were to have an economy crisis or some sort of failure within a bank, then of course that would be detrimental to us. But for the most part, our bank is constantly expanding, continuing to provide many new services within branching out of asset management and wealth management. And of course, with the emergence of baby boomers entering retirement, that's always a big part of our bank, being that those are services that we specialize in. And you know, even after 2018, after very steep declines within most of our margins, we're seeing a lot of recovery and a lot of growth going into the future. So thank you.